What's up, Xander? Happy Halloween.
Happy Halloween. I'm a tree.
I'm my dog. So, Xander, I know we try to stay away from politics on this show. This is the Games Growth Podcast, right? We focus on the gaming industry and the trends in the gaming industry. But holy crap, man, are you familiar with the concept of the October surprise?
Oh, I am very familiar.
So I hate to do this, but we have to cover it. Like, we have an October surprise. It directly impacts the gaming sector. And sorry, people who have political opinions across the spectrum, but it would not be right of us if we did not cover this. So we do think it's critical. So this October surprise. If you haven't seen this yet, brace yourself. So are you familiar with like the concept of like oppo and opposition research?
Of course.
So
yeah,
there's this like crazy oppo that came out today on JD Vance, and I think it's really essential that we cover it for the audience. All right, so sit down if you're standing up. I'm just going to go right into it. So it came out this week that JD Vance in the game of Magic the Gathering has been a Yawgmoth's bargain player, famously known for the quote on the card, "He craves only one commodity," with it widely known that commodity is power. So this Oppo article came out on JD Vance via the independent Power at Any Cost. JD Vance's favorite Magic the Gathering deck tells us all we need to know. This, I think, is going to just be absolutely crushing for the Republican ticket in the election. I don't know if they're going to be able to recover from this. And for a little more insights, like as to what this means to be a Yawgmoth's bargain player in Magic, I'm sorry, but there's a lot of implications for this. So
I think the real alpha here is that JD Vance plays Magic. Right? Like, I mean, it's like bonus points in my book.
For those that aren't as familiar or as in-depth in Magic the Gathering, what does it mean to be a Yawgmoth's bargain player? So essentially, as the subheadline here says, you're selling your soul for power. So when going to the community for comments on what it means to be a Yawgmoth's bargain player, as Vance has now been outed, they are known for being, quote, annoying and to play against, and also a version of what's called a power gamer. There's a lot of implications for being a black mana themed deck. Traditionally, these mono black decks, I hate to say it, they are associated with, as the article says here, greed, ambition, dominance, wickedness, the dead, the undead, vampires, demons, and even blood magic.
Oh my God, blood magic.
I mean, I've seen some, I'm a little bit older. I've seen these October surprises come and go. But I don't know what this means for the election. I mean, I think the citizens are going to be in chaos. I mean, has to upend so many voters' plans. Do you think there's any chance that the Republican ticket can recover from this, Xander?
I don't know. I just checked Polymarket and Kamala is up significantly on this news. So I think that, this must be it. Poor guy. I mean,
we know why.
So much of his life, he spent so much of his life building up to this moment, and this is how it goes down. The real question here about Warren, what's your favorite color in Magic?
It's also black, but don't judge me.
Okay, there we go. That's all you need to know.
All right.
Great. Welcome to the Games Growth Podcast, the special Halloween edition. I am Xander. I am a tree. It's been a while since we've done a news episode, and so we have a lot to catch up on. To that end, we are going to catch up on the industry in two parts. This is Games Growth, Growth Marketing. So we will do a section on the games industry, talk about some headlines, talk about what we see in the trenches, and on the flip side, we will talk about the marketing industry, how some of the earnings reports have come out, looking good for the marketing industry, and vibes there.
And I'm Warren. Thanks for the intro there, Xander. I appreciate it. Yeah, I think we just wanted to do a check-in because we haven't done news for a little bit and there's been a lot happening. We are going into our big end-of-year push for the games industry. Q4 is typically when, plurality of revenue can be made for a lot of sectors of gaming. So what are the conditions that we're going into Q4 here? How does it look from both these sides, from the developer side and from the marketing side? As always, the pod is brought to you by our team here at Upptic. Here at Upptic, we help games grow. We do this by doing the work for you, with you, the user acquisition, creative, and analytics work to make games grow. We also make really sweet software if you want to do this yourself, but do it more efficiently and effectively. You can learn more about us at upptic.com, upptic.com. Let's get into the news.
Let's get into it. All right, it's coming off. It's too much. First, a couple headlines from the games industry. Call of Duty Black Ops 6, we're on 6 by this point, is the biggest release in the franchise history. Little quote, Call of Duty Black Ops 6 is the biggest 3-day opening sales in the 20-plus years of the franchise. Microsoft announced earlier today on an earnings call. This was from yesterday, so not quite today. Satya Nadella, Microsoft CEO, said, last week's launch of Black Ops 6 was the biggest of the Call of Duty release ever, setting a record for day one players, as well as Game Pass subscribers added on day launch. That's important. They're trying to push that really hard. And unit sales on PlayStation and Steam were up 60% compared to Modern Warfare 3, which was last year's edition. Interestingly, Microsoft doesn't give exact numbers for what this release means. It looks like it's something to the tune of 50 million plus sales, but those numbers are not officially described. The interesting sort of differentiation here was that this is a product that was developed over 4 years, where usually they do a 3-year cycle to get them out as fast as possible. Seems like actually putting an extra year in to get the product polished is a good idea. So that's all very exciting. Warren, are you a Call of Duty player?
I am absolutely not. I'm horrible at Call of Duty in any game that remotely resembles Call of Duty, but I do think there's a few interesting things here. So this is a Game Pass release, right?
Mm-hmm.
I've been talking a lot. We were chatting earlier this week about how there's this kind of like bifurcation in the console wars now, where the big wins from Xbox are increasingly based on the owned and operated studios within the Microsoft sphere. And this is a great example of that. You'll notice in the numbers that were dropped, no revenue numbers, right? Because most of these are probably players playing via Game Pass. But it is what's keeping Xbox, I think, competitive, because on the other side of that, we've been seeing more and more titles that are either PlayStation first or PlayStation only. In my household, we all want to play like the remakes of the Final Fantasy VII, and those are not coming to Xbox anytime soon. So we're seeing this kind of bifurcation where Microsoft and their sphere is all in on these owned and operated. We saw this with Starfield. We're seeing it again with Diablo 4, and we're seeing it again with Call of Duty Black Ops 6. They need these first-party hits to keep the value proposition differentiated and give people a reason to keep an Xbox in their family, because otherwise, for third-party, PlayStation has clearly been winning just based on install base, and I think developers are biasing their development priority for PlayStation for this. So we're just seeing like a real bifurcation of strategies here. I don't know who's going to win out in the end. I'm still an Xbox and Game Pass loyalist. I think you can't beat the value. And when hits like this come out, even though this game's not for me, I think it's what makes Games Pass really sticky. And we've talked a lot before about how Microsoft is big enough that they can take a loss on this for years to own part of the player base. And I wouldn't be shocked if, as big of as Call of Duty Black Ops 6 is, if it's also like a loss leader in just getting adoption of Game Pass and the ecosystem.
Yeah, I don't know I imagine this game is probably profitable I think it's probably one of the most profitable franchises there is. But that being said, I do understand that their key goal, and they just reorganized Satya Nadella's pay package so that Xbox Live subscriptions is a component of his pay package. Mm-hmm. So it's very clear that this is the thing that they're investing in for a long time. We've talked about the economics of this from a player's perspective. Value is incredible. Interestingly, so I wanted to do a little quiz. Don't look at the outline for this. Do you know what the top 5 franchises of all time are, Warren?
For just gaming overall?
Games overall, top 5 franchise in terms of sales. And this is going back to the beginning of gaming.
I'm going to throw out Call of Duty because I'm just assuming that
Call of Duty, number 2. Number 2.
Okay. I'm going to throw out Pokemon.
Number 4, Pokemon. That is correct.
I'm going to throw out, this is a bit of a wild card, but I'm going to throw out Dungeon and Fighter.
I don't know what that is.
It's a huge franchise in Asia. And then I'll say, does Mario count as a franchise?
Mario counts as a franchise, and according to Wikipedia, is number 1 with over almost 1 billion units sold.
All right, so I'm 3 for 4, and I get one more guess. I'll say the Halo franchise for my last one.
No Halo franchise. You did miss 2. 1, Tetris. Still going strong after all these years. Okay. Number 3, Tetris with 500 million-ish sales. And number 5, which I think will very likely catapult up this list next year when it releases, GTA 6.
That makes sense.
So just really quickly, top order: Mario, Call of Duty, Tetris, Pokemon, GTA. So, I mean, congratulations to the folks at Activision. Call of Duty continues to be a behemoth. I mean, we're rolling on to decade 3 of Call of Duty, and they continue to crush it. So, I mean, this is where, when Microsoft made the big acquisition of Activision Blizzard, people were a little skeptical, but, they needed first-party content. This is the strategy. We'll see. They're willing to invest for the long haul. We'll see if it makes sense over the long term. Okay, so a couple more quick headlines that I want to roll through. These are just sort of a snippet and a taste of what's going on. And we want to talk a little bit about the Electronic Arts earnings as well. So video game publisher Electronic Arts reported revenue ahead of Wall Street's expectations in Q3 for this fiscal year. The sales are up 5.8 on the year over year to 2.03 billion, exceeding estimates by 2.5%. Revenue beat estimates. EPS was up by 25%. That's earnings per share, basically profitability. And their EBITDA was about a 5% miss. Now that's all good, right? EA, one of the largest publishers in the West, huge franchise. Now this is the thing that I think is interesting and I think is more representative of the overall ecosystem, which is EA expects a significant year-on-year decline of 17.6% next quarter, with analysts projecting a 5.1 revenue decline over the next 12 months. So good year, beat on the top line, but going forward, they're guiding down. And that I think is the thing that's really interesting. And I'll read one other article quickly, but I think when we take a step back and talk about how we feel the industry's doing. It's like, this is kind of the key thing. It's like, yeah, it's good. We're limping along. We're doing well. There's growth, but we're not projecting gangbusters growth like we have been for the last couple, decade or two.
Yeah, I wouldn't be shocked if we see a lot of this trend. And I think, development takes a long time. So we have to kind of look at what were the actions in the couple of years preceding, because that's going to inform the pipeline, which is then going to inform the revenue. And we've talked a lot now for like the last, basically, post-COVID gaming had a huge boom. And in the couple of years post-COVID going back to normalcy, it's been a painful time for game companies. There's been layoffs everywhere, closures of studios, decreased funding in new studios. What that means is less development happening and less games coming to market. So I don't know the details here, but that's what I'm guessing is leading to them going from a good quarter now, which was funded by probably development that some of those teams might have been downsized, or some of those other products that were initially queued to come out these years could have been canceled as these big companies have been tightening up their development and how much they're investing. So that's my hunch here. I don't know, Xander, do you think that's off base?
I think that's right. And I just wanted, this is sort of like the more moderate mid-level expectation. And I wanted to read another article that we'll touch on from a company called DFC Intelligence. Now these guys they're analysts, they sell their reporting. So this is maybe a bit of a headline number. They're trying to make the industry bullish, but this is what they're saying. According to IDF Intelligence, video game industry poised for strong 2025 rebound. A little quote from preview of their upcoming report. While the pandemic initially boosted the market tremendously, it's been trending downward since the early last year, with 2024 representing a chaotic nadir that included mass layoff, extensive closures, and acquisitions of small and mid-sized studios, and disappointing hardware and software sales. We expect 2025 to mark the beginning of a major upswing that will last at least through the decade. DFC Intelligence. This is just a preview of their report that's dropping in December. I think it's just largely marketing material to get you to download the report in December, but it is a sort of interesting indicator of where analysts think the industry's heading. They call out specifically 5 segments. They say they expect record market growth across the PC and console video game segments. They've noticed in the back end of this year, and they expect to see on a forward-going basis increased spending on hardware. They expect a new console cycle within the next 5 years. They don't really break out what exactly that looks like, but they expect there to be increased console spending because of new consoles. And then they also talk about how in the PC consoles landscape specifically, there's a shifting towards live ops, which they assume is going to increase revenue. And then they have a bucket called battle for distribution. Not really sure what the implication is there. But anyway, that is to say that there are some folks who are saying that we think that we are in a point where we have sort of leveled out with our stagnation and decline, and we will see increased growth going forward. And now I will just very briefly throw up this chart. This is where I'm slightly skeptical of this. You are here. This is my favorite chart that comes from every analyst. It's like basically we're growing, then COVID happened, now we're downsliding, but don't worry. Starting tomorrow, the chart is going back up and to the right. And so this is what one analyst says. I'd say color me skeptical. We think the reality is probably a little more bloodbathy than this. At least that's my take. But any thoughts on this very short summary of a report, Warren?
Yeah, I'm somewhere in between on this. I mean, I do think that maybe the max pain period is coming near an end. Not to get slightly dystopian, but I do think over time, gaming is going to only occupy a higher and higher percentage of human time as we get more into the era of automation and AI, and people have less manual things we need to do with our time. And obviously, as co-founder here at Upptic, I'm betting big on gaming as a sector, so respect the source, I guess. But I am skeptical that immediately after today, things are going to rebound. In line with what we talked about development cycles, I think it might be something that's more like 2-3 years out that we really start feeling healthy again.
And we've looked at other analysts, I don't want to call it out by name, but we've basically seen the same chart for mobile.
You're right.
Everything was going great, it crashed, and now we're at the bottom, and it's going to go back to be great tomorrow. And it's we'll talk about what we see in the ads, in the marketing side of this. Part of this is a consolidation and marketing problem as well, and we can talk about that in the next section. So just sort of wrapping up, that was some of the headlines. Let's talk a little bit about the vibes, the important things, what you guys come here for. I mean, I think my belief that the industry is fairly in line with headlines, which is to say, we're not in a consistent or vigorous cyclical uptrend, and we are in a more saturated market, right? And so growth is slower, steady, but slow. And I think that's kind of what you just said. It's this is in games for long haul. I think there's obviously tons of good businesses to be here. I'm an avid game player. I will likely continue to increase the amount I spend on games over time, but this is not the Wild West. This is not, mobile and the early teens, right? And so I think, I was at a couple of conferences last week and the week before. There are some people raising new funding, so that's good, right? There's like new money being injected into the industry, but it's a pretty tepid environment. Even the people with a lot of funding are very, very cautious about the way they're planning to deploy the funding. And I think that's indicative of a different mindset than in the 2010s. Budgets are pretty tight right now. And I think people are generally being cautious with new investment. So that's overall sort of my take on where the industry is. Warren, do you disagree or do you have any other additional thoughts?
No, I think that's right. I mean, we talk to a lot of teams, like we work with some of the biggest companies in gaming, but we also work with a lot of startups that are trying to ship their first game. And as you said, Xander, funding is finally starting to open back up, but we've seen a lot of companies that were like losing the next round that they're expecting, like losing a lead investor that, pulled the rug from under them. And also just talking to a lot more younger game companies that are very open of saying, like when they get on a first call with us of like, hey, we only have X months of runway left. Like, we need your help in just sort of proving that we have something here before our runway expires. And I think that that's just it's more frequent, and also just the direness of some companies' situations with the lack of stable long-term funding is definitely a theme of this period.
Cool. That's the vibe check on the games industry. We're going to transition over to the marketing industry, which seems like they're doing okay.
We wanted to do this roundup of a few headlines in the marketing or advertising side of the industry, the growth part of games growth. First, we wanted to talk about Reuters. Headline is Digital Ad Sellers Jump as Google, Reddit, and Snap earnings indicate sturdy demand. And so the summary of what they're talking about in this Reuters article, quick pull quote, pairs of online ad sellers surged on Wednesday as strong earnings from Alphabet, Reddit, and Snap signaled solid spending from brands ahead of the crucial holiday shopping seasons. The three companies were set to add more than $110 billion combined to their market cap. The concurrent strength in results appears to be an indication of strength in the U.S. economy as well as a benefit from the U.S. election spending, said Gil Luria, who is the head of technology research at D.A. Davidson. Yeah, this bodes well not only for the holiday season, but for other digital advertisers such as Meta and Pinterest that do not believe have reported yet at the time that we're recording. I'm just going to quickly cover all three of these articles and then we can discuss. The next one is about Reddit, and this is from Ad Exchanger. We'll link all these in the show notes. So the headline is Reddit's ad biz exploded in Q3, albeit from a small base. And so a quick summary of what's going on with Reddit. The company reported just over $348 million in Q3 revenue, up 68% year over year, which blew away estimates. Yeah, wow. While ad revenue for the quarter was $315.1 million, a 56% year over year increase. And that has definitely benefited Reddit's stock price, which pumped 20% after hours on the day that this was reported. I pulled a quote from the article that I thought was funny too. The writer said, and there's still more room to load these pages with ads. Reddit first launched a conversation ad unit in 2021, which placed a banner ad directly beneath the original post in a thread. Reddit announced plans to introduce even more ads interspersed between comments. And for a few more things, just unpacking the essence of this article, why is this jumping so much? The main thing that I saw was, outside of a couple of trends that we're going to talk about at the end, Reddit is just slamming a lot more ads everywhere. So it turns out that when you get paid per impression, which is the business model for Reddit and a lot of ad companies, and you show those ads more frequently or in more places, you get more money. So there's a couple of seasonal trends that we'll touch on in a moment here, but I think that's the big change within Reddit's control is they just started jamming ads in more places. Also, Reddit is notoriously aggressive with impression capping. If you are a Reddit user, you will know that you will get served the same identical ad, often in your infinite number of times per day. I am not sure if they've yet introduced impression capping on their side, so I don't want to say something bad about them, but I do know that by default, they will serve their ads, essentially uncapped, which is not a great way to do performance marketing. Okay, cool. And then the last article here, Variety, is on YouTube and Google. So the headline is YouTube Q3 ad revenue beats forecast, rising 12% to $8.92 billion. So YouTube generated a cool $8.92 billion in advertising revenue for the third quarter of 2024 as the world's biggest video game streaming platform continues to turn in double-digit growth on already big numbers. YouTube's ad revenue, reported as part of parent Alphabet's Q3 earnings, was up 12.2% year over year. Wall Street analysts had forecast YouTube advertising revenue coming in at $8.89 billion for the quarter. According to Street Account, the ad revenue figures don't include subscription revenue from YouTube TV, YouTube Premium, YouTube Music Premium, or NFL Sunday Ticket. So everyone's ad earnings are pumping, Xander. We've got Snap pumping, Reddit pumping, YouTube pumping. We're waiting on Meta and Pinterest. Why do you think that might be?
It's a good time to be a platform. It's a good time to have ad inventory. You mentioned something sort of in passing at the top, which I think is interesting. We're in election season.
Yeah.
I don't think that's completely representative of this increase, but oh man, does it not hurt? I think that's definitely...
Yeah, only one of the 3 articles really mentioned that. And it's like, we're here in the trenches, we're buying, and we definitely see as we're approaching the voting date for the US elections, that definitely those platforms that get more brand spend have had their CPMs increasing. And it's because of the crazy raises of both parties and their massive, aggressive advertising spend. And political advertising spend is notoriously broad. Yeah, I think they think it's targeted, but it's targeted at sort of like a regional level, definitely not at the same level that we think of most performance marketing. So no thanks to the campaigns for jacking up our prices during this season, but it will all be over soon. I do think part of it's real, though.
Yeah. To be fair, we're recording this October 30 on Halloween, October 31st. This is looking back last quarter, and so I think there's much less of that in these numbers than they will be in the Q4 numbers. But I think largely it's just we're in the era of hyperscalers, right? Scale is the thing that matters, and it's good to be a hyperscaler. The biggest platforms are continuing to consolidate, and they have data advantages, technology advantages, scale advantages, and they're going to continue to squeeze out smaller people and smaller.
I just thought of one other big thing that happened during this period. We covered it on the pod in the past, but it sounds like a really wonky thing. It's super relevant. YouTube finally added the consent prompt for tracking on iOS. So we talked about this a couple times in the past, but prior to the summer, I think it came out in June, performance marketers basically couldn't buy on YouTube on iOS, which is obviously like a huge portion of the spend, because there was no consent prompt to get revenue and attribute to those users and do actual performance marketing. So opening that up, I can say anecdotally, we've been spending a grip on Google iOS, and it's been working great because it's a channel that is just infinite, and there's a gap in competition because a lot of teams still have not caught up there. And even if you are buying there, you need to model because you're still only getting consent from some subset of users. We have tech that can do that. Cool. Most teams don't. So there's a few reasons why Google iOS has been super juicy for us lately, but some of these can benefit you too. So give it a try.
Yeah. I mean, YouTube is just a monster. Advertising business is way up. And that was, we normalized out YouTube TV, YouTube Premium, YouTube Music, and NFL Sunday Ticket has got to be a big thing. NFL Sunday Ticket costs like $600 for 4 months. It's crazy. Yeah. I was literally going to buy it, and I looked at the price, like, absolutely not. I'm not that much of a psycho. So, I mean, YouTube is a gift that keeps on giving. I've sort of said this is somewhat related, but like, if you want to understand what marketing is going to be for the next 2 decades, you have to watch Mr. Beast. And it's like, I think that is actually right. It's like, this is not a platform that is going anywhere. It's growing substantially. It's becoming one of our, if not our largest distribution channel for this podcast. And it's more and more my consumption is moving to YouTube. And so that's just all anecdotal, but the numbers absolutely back it up. I wanted to touch really quickly on Reddit as well. Reddit is a really, really interesting place. One, I think you made the point, they've only started to sort of penetrate with the number of ads on it. If you want to see something funny, look at what Meta has done over the last decade and a half with their ad impression rates. They basically every quarter increase the number of ad impressions by increasing ad slots. If Reddit even dances around the same strategy, this is going to go up and to the right for quite some time. And the other thing I'd say is that Reddit is the beneficiary of a search-like value prop, which is to say, when you search for something, you are showing the intent of what you are interested in. Subreddits are doing a very, 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 very similar thing. You don't actually need a ton of targeting on the user to understand how to sell to someone who's interested in r/watches, for instance. You can just advertise them expensive watches. And the same is true for anything else, costumes, dogs, whatever. These people are opting into the things that they, I think, are important to themselves, and they're easy to put ads against. And so, I mean, Reddit, I kind of was skeptical when it came out. I didn't buy any shares, but it's pretty clear that there's a platform that's going to continue to monetize over time and still continues to grow over time. There was a very interesting interview with the CEO that came out, I say about a month ago. What he talked about is 80% of Redditors are in the US. And so imagine that this platform starts to be able to scale externally to the United States. That's a really, really huge opportunity. One of the things I think that was really interesting, which is maybe an unlock for this, and maybe this is me just like drinking too much of the Kool-Aid, is talking about using artificial intelligence as a translation layer between US native content and in international content as a way of seeding Reddit in those international communities. That is maybe just like cope, but that seems really freaking usable. And so it seems like almost inevitable that this platform continues to grow and that the ad penetration continues to grow. And so that's a place to keep an eye on going forward.
Yeah, I think that's right. Reddit has always had the DNA to be a powerful performance marketing ecosystem. It's just sorry, it's really sucked at execution. Like, they've had a horrible performing product. I have not tested in the last few months, but historically, any test with Reddit, it's typically been the worst performing ad network. And I hate to say it, but I'm also saying this if anyone at Reddit is listening. Like, I hope you guys continue to invest in the actual infra for your ad network. I think you're already seeing the rewards of doing a bit of this. If I had to guess, there's probably some ex-Meta people that worked on their ads ecosystem that they've brought in to just do some of the standard best practices. But I do think long-term, they will become a power player. They're a publicly traded stock now. They have an incentive to increase revenue a lot more so than they did before. And they have now got a taste of how being more aggressive and intelligent with how ads are served can help with that.
Yeah. So, I mean, I think it's a good time to be an advertiser. I do want to just flag the thing that is sort of like more like a structural political issue or economic issue. It's like there is a structural issue with the incentives here, which is to say the strong are getting stronger and there's not really any sign of reversing. At a certain point, this has like broad economic impact for the economy overall, right? Because what it ends up doing is as these ad prices are continuing to jack up, you price out small and medium businesses, which means that you either have to be a large company with first party inventory or find some way to be to incremental value within your value chain. And, you know, it's pretty hard to imagine like new emergent ad products that are going to exist outside of these behemoths right now. I mean, the one place that we are hearing the whisper of this is AI-driven ads products. I mean, that is true. There will be some AI-driven ads products. But the thing is, those are owned by the same players, largely, and the same VCs. And so it's not like you're having these new breakthrough innovative companies that are going to be mass players. I mean, we'll probably see some, but good time to be a shareholder and a tough time to be anyone else.
Yeah, I mean, my final thought is I think it's going to be a pretty fiery end of year for the gaming sector. We've got a flurry of advertising between some big games coming to market and interest rates coming back down. And we also have the last throes of the election powering the ads ecosystem. So strap in for November and December 2024. I'm really curious to see how this is going to be doing for our portfolio. Right now, everything's doing pretty good from a performance standpoint, but I'm curious how hard the brands are going to go. This is usually when we start seeing like the cost of inventory super get jacked up. Yeah, so I don't know. It's game on, basically.
Great. Game on. Let's play.
As always, the pod is brought to you by Xander and me over at Upptic. What's Upptic? Upptic helps games grow. How do we help games grow? We do the work for you, with you. We do user acquisition of all types. We do performance marketing. We do community marketing. We work with content creators, or KOLs as they are called, that I learned about 2 years ago, key opinion leaders. We do all this stuff and we measure it all. Measurement is super important. And we do all this measurement with our platform. If you can't afford to have us be your team, we're really good, but we're not cheap. What is pretty cheap is using our tools. You can use the same tools as us. It's called the Upptic Games Growth Platform. And you can use all the same tools that our engineers have built in-house to give our team the edge with the games that we've been able to really scale profitably. And you can now use those for your team too. So if you are building a game and want to do it better, there's a fair chance that we can help you with that. So reach out through our website. It's upptic.com, upptic.com.
Talk soon. Happy Halloween.